following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 27th day of June, just about to wrap up the month of June. Ooh, what a wrap up, huh? So thank you to our host. Great shows all the way from John Logan this morning, 8 o'clock. Then, of course, you get Larry Pesavento, terrific show. And, of course, congrats on your terrific gold call there. Larry, the other day you said that had to work, and it seems to have worked well. We've got Tom and Tommy, great show. We've got with Daryl. I hope that I can keep up that standard. And then, of course, you got your trading, and you've got your, what have you got? You've got swimming lessons at noon Eastern time. And then, of course, you've got Steve Rhodes, you got Dave White, Tom O'Brien back again. What a day. All right. So the Dow was down over 300 points. Now it's at 17,110 at minus 290. The S&P is down 40 at 1997. The comp index, excuse me. Comp index is at this time is down 117. This is going to be very interesting because gold is trading up at the 1326 level, up 420. You'd think it'd be up quite a lot more. We'll look at all these things. We'll go one at a time, but let's just get the numbers out the way. You've got silver, which is now down a fraction, 0.004. It's at 1778. Platinum's down 6 at 978. This is interesting. High-grade copper is holding the 210 area. It's at 212, up at 110. Crude oil is down at 46.41. The market going down, you'd expect crude oil to be going down. It's kind of they work in simpatico. And what we've got here is the bonds up at 172 and 26.30 seconds, up 2 and 27.30 seconds. Now, this is going to be very important because the dollar is up $1.16 at 96.74. How often do you get the dollar and gold moving up together? Well, you get about 4 to 6 weeks a year, maybe twice a year that happens. But when they move up so sharply together, that is unusual. So now let's go through the numbers in a different way. You've got the E-mini, which is down 31. It hit a low so far this morning of 1981.50. I've got a Chapman Wave signal flashing in my Chapman Wave trend gauge, which is really based on Richard Armstrong gauge. And my thinking here is that we've already had one move of almost 20 points off the low. The rule of thumb is that within 2 days, you should get a rally in the E-mini futures, and then that should translate into a bounce in the cash. Now, if it's on the way down, so just be a little careful shorting at this particular time because you'll have a better chance after that rally. Well, we just had that 20-point, let me show you here, 20-point move. Look, he had a fantastic move from 1999 low to 2064. It's a 70-point rally, and that was on the 24th. And then what happened was came tumbling down to the 2001.50 left side, right side arch formation at a peak E. Top, it came down to a trough E, and that was at 8 o'clock, let's see, last night on the 26th. And then you've had a rally from 2001.50 all the way to 2022. That is more than a 9 to 11 point gain. And what happened is you came back, retested that 2001.50 low. This is a 10-minute chart. I like to show it for those of you trading intraday. Had a bounce. It came a little early from the left side, right side price time match. Had a bounce and then broke down in the larger context where I used the plumb line of that peak E top that was made at 3:20 this morning on the 27th of June at 2022.50. You plunged under it, which means that there's a chance that you could make a one-to-one extension to the downside, kind of what we've done. This is a leg C to the downside. Sometimes a leg C doesn't have to go to a leg D, especially when you've had a completion of a trough E in this case, with a big bounce to a peak C minus. Those of you who know what I'm talking about, you'll understand at one glance what I'm talking about. Most importantly, look at the move from 2119.50, that high that was made at 620 on the 23rd. Remember, everything was looking just fantastic on the close on Thursday. It's so upsetting. I was looking for just 1 penny above the all-time high of 18,351. I even would have been satisfied with a move to the 18,180. Let me get to the Dow right here and show you something. INDU. I would have been satisfied to go 1 penny above that 18,060 high to form a potential leg C, and then just squeak to 18,168. That's all I wanted. And then I would be getting leg D in the weekly chart, and I would be setting up trades, because that's my plan, was that we were going to go to either an all-time high, or at least close to the recovery high, and then reverse. And then reversal, I said, could be really sharp, but I don't think we would break the February low. More importantly, it would be another one of those arch formations that just keeps going up and down within a really big trading range. And look what happened. We went to a peak D in the 120-minute chart in the Dow, and just collapsed the next morning, just really broke down, and we were down over 600 points on Friday. You know, sometimes the market, you have the best laid plan of mice and men, don't always work out. You get filtered out there in a different way. Now, what is really important is that within this context, I got a couple of questions about my account on the 10-minute chart. For some reason, I might be missing something because they're real close together, and I was really so busy. I wasn't doing any trading at all early this morning. I wanted to get that right in terms of the patterns that we were looking at. So I said, we're going to do no buying at this particular point. Although normally my predilection would be to buy at a certain time of the day in a session like this on a Monday, thinking that there could be a reversal in the VIX, even if it's just short term. In the meantime, there's no need to do that. There's no need for heroism out here. We've got a short that's working beautifully. Our long actually is one of the only stocks that's up. It's not a short long, it's a long that we've had since December. It's doing very nicely. It's up 30 cents, 41.82, which is nice. We got it in the 34s. I can't complain about this. This is action, market action. You just try to be as prepared as you can. Just real quickly, let me show you this. In the arch formation that keeps repeating, remember I spent a lot of time, certainly with my subscribers, showing the New York Stock Exchange in the weekly chart. And this could really turn out to be, without the question mark, if we drop even a little bit further from this level here on the New York Stock Exchange monthly. Number one was the high in September of 2000, plunged to the downside. The high in 2007 at 10,387, number two, plunged to the downside. And now we've got the April high at 11,254 in the New York Stock Exchange. May of this year, it was May of this year, sorry, May of last year, and we're matching that particular pattern. I'm not going to fight a pattern. That's all I'm saying. Okay, that's that. And now look at the Dow pattern that I showed subscribers. I did in the end send out a lot of charts, all of them discussing what we were looking at and saying, just be real careful. Remember, cash is a position. There's nothing wrong with having cash. You don't have to always be short or long. You can have cash. Preserve your capital, please, please, please. Now, here we are in leg C down, huge decline, starting to match this area right here. I'll be back. Basil Chapman, Tiger Technicians out. Dow's down 314, S&P's down 42. I'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, Visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
To just show here, if you're using Elliott Wave, if you're using my Elliott Wave, not the regular Elliott Wave, I would consider this to be wave 1 to the downside from the high that was made over there at 2022.50. That's the X, and here we go 1, 2, 3, 4, if you're looking at the chart, and we've just had a very long extension of a 5. This 5 could even make a little mini 5 waves down, so you could go to a trough D. That's not a problem, but I think this is the area I'm going to circle, make a rectangle to say. This is the area for a bounce. Now, I've got a big circle here at 1998's 98.50. That's 13 points. I don't see it right now. It's 13 points in this time frame. It could be it in a longer time frame. So I'm just going to do this. I'll make it a rectangle to say that's the basing area. Maybe there's one more dip to the downside, but just on an oversold level with the VIX and everything that I'm looking at, I don't get carried away. I just think that this is a good chance that we're into the area now where we could have a bit of a bounce. There's nothing going to happen unless we can tackle the candle of 10 minutes to 11 this morning, and that's between 1991.50, open at 91, and 1994.25. So that's still a long way up, and we haven't even taken out the high of the 10-minute bar just previously. So this is what I'm just doing this in terms of a reference of the technique that I like to use, and I'm going to be very conservative about it. I'm going to put it there, and I'm going to put it right there, just to show you the other techniques in every time frame that can be used using your template, in this particular case of the Chapman Wave. And it says there better be a big rally, and that rally has to come within the next by 12 o'clock. By the time the show's finished, we've got to be tackling this area right here of 1994, and we're at 1984. That's 10 points. It's going to be tough. It's going to be tough. I wouldn't use this as a trade, because when you've got the viciousness of all the markets around, just about, not everyone, but just about all the markets around the world against you, then you need a much bigger trigger to be able to get a concerted effort that has sustainability. I'm looking at the TVX. Let's look at the VIX index right now. The VIX index is suggesting If I can move it over here so that we can get a decent low. There we go. So I'll put this in as the low. I'll put an up arrow because you look most identifiable low bar. Then we're going to go up arrow and we'll go like this. A. And of course, it's always great to do it with history behind you because there's very little chance that you're going to be wrong. A, B, I've got the pink still showing. C, D, E. Now I've got a brand new one. A, B. That's a higher high. C, D, E, F. Okay, good. So this is the other here is the pattern that 40, 49, 47. Good, everything's correct. So now I'm going to put the down arrows down. This is with nothing but two moving averages involved. Usually I would prefer to have some secure. Oops, I'm going to sneeze. Here we go. Excuse me. And here we go with this, and I think that this is going to make an arch formation with just a bit of a rally attempt coming up soon. Let me make the arch formation right here and just make it real simple. And remember, this is just intraday trading. I just want to show you some techniques that could help you. And in this particular instance, that positive crossover of the faster moving average says, okay, if this particular candle of the VIX index at 2552 starts to break above this candle's high of 2606, it will start probably to make a C, maybe even a D in a left side, right side price time match. But as I'm looking at it right now, I think there's enough selling pressure that's occurred for us to say, wait a minute, let's just go back to this particular chart and see where it is. Maybe we're going to go to a D in the next 10 minutes or so and then get a decent rally. It looks very unlikely to get to that high over there. So this is where you start looking for the probing. They call it the probing of a base. And that's all I wanted to say, that there are techniques to use, and I'm using this as both Chapman Wave. We've got a tough C. Usually we like to see a D, but we have got 5 coming up in Elliott Wave, the way I read Elliott Wave. All right, let's get back to the nitty-gritties. Where are we in the overall market? That's really the question that I would have. Oh, Jerry in the back bay. Jerry, how are you?
All right, how are you?
I'm well, thank you.
EDV.
All right, let me get to that. So this is, let me just put that as a default, and that is a default, and I'm all set. EDV, here we go. EDV is, in fact, the Vanguard extended duration, just making a leg E in the weekly chart, hasn't yet made a D, A, B, C. Hasn't made a new high in the January. January high was 141.91 back in January. And we're trading right now 138.34 within a whisker of going above that. And you've been in this a long time, right?
Yeah, I bought it at a 3% yield thinking it was going to 2, and now it's at 225. So I wonder what I'm thinking. Should I sell some now that it's extended and buy it back down the road?
Okay, so Jerry, I'm going to make this decision right now. I would not be surprised if our market is within a day or so of at least what I call an internal short-term low with a bounce. Yeah. But the way I'm looking at this, I don't think that any of the countries could come up with anything that ameliorates the pressure, the selling pressure in the market. So I would not recommend that you get out of it completely at all. I'm going to make it much easier, and I'm going to say, look, let the market. You've been so patient. You've had such a tremendous trade. You might not be getting the dividend, but you've more than made up in capital appreciation what you thought you would get. Correct?
Right.
Okay, so this is the way I would look at it is this: the timing to get back, because I believe if I'm going to go to the Dow chart in a minute, and I believe that we've still got to go down, possibly now towards the 16,700s. The moment we break 17,000 as support, that upper 1600s area, 16,000, sorry, in the Dow is going to be very important, but that would be kind of a target for me. So if I'm saying that to you, I would just ask you the question. I say, Jerry, where do you think bonds would go? Would they go higher or would they go lower? I'm just going to make it real easy. And
well, if we have a bounce and another try down, they're probably going to go higher. Because
Right.
what's
So
what's happened is so confusing to money managers. I think they're paralyzed. There are so many potential side effects of this that it's really confusing, and I think they're paralyzed. So that it's hard to figure out what to buy.
There's no question that they're paralyzed.
In
So-
money managers figuring out what to buy.
Okay, so let me just show you. I don't know if you can see it, but if you're looking at Tiger TV, you will see that I'm putting in a leg E to the downside in the 30-year T-bond yield. It's at 2.29. It's under 2.3. Is just incredible. 24 was the last low. That's 2.4, and the 10-year is at 1.468. And that's making a leg. When I didn't put the legs down. Okay, so it's just pierced the previous low, and the 10.08 low on the 5 years now at 9.95. I think it's worth. I'm going to do a couple of things with you because I've got a strategy that you might just at least want to consider, and it allows you to have some flexibility and let the market tell you. So hold on. Can you hold on, Jerry?
Thank you.
Great. We'll be back. Dow's down 306, trying for a rally. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So this is the first little bounce in the 10-minute chart from that 88 wave 5 that I call it 88 wave 5 trough C, and we will see what happens, but it's only still at 1988.25. Has to get to the 1990 4, I'd say, area, and then we're going to have a bit of more of a rally. Okay, so we got Jerry, and Jerry, this is what I'm looking at. My thinking here with EDV trading at 138.14, up $4.14. This is Vanguard extended duration. Is that because you've been patient, because you've done everything right? I'm saying to you, the market at this point is still rewarding you, but we've had 2 big gaps to the upside. Going to a gap, going to a gap that gone to a new recovery high, but not an all-time high. My contention is that under the circumstances, there's just a really good chance that the Japanization of our bond yields, I don't know what the countries are going to be doing right now. They can't, there's no way that the Fed could even consider raising rates at this particular point. What are they going to achieve? So my thinking here is it's still the place to be. That's number one. And number two is, why don't you instead, maybe it gaps down tomorrow or something like that, but why don't you rather keep your core position, and you can have a trading 1/3. It still keeps you, the bulk is in the position itself.
Right,
and
right,
that position,
sure.
and that position you've got time. You could make a stop at some point in that position, but the trading position, you could say right here at 138.08, I could take of my 1/3 that I'm talking about right now. You take off a half of that 1/3. In other words, you've taken off some. The other half of the 1/3, this little trading position that I'm talking about, you could put a stop at about 136.60. So you give back a point and a half. It's no big deal. But that would be the stop that says my trading third is now completely out. I've got 2/3. That's what I've now got to handle. My thinking is there's a worst case basis of 132, the 9-period exponential moving average. I don't think you'd mind if after these big gains it gave back 4, 5, 6 points, and then it still held, and then it went to higher highs. Because I'm looking at that monthly chart, and that monthly chart is just getting stronger. It's not getting weaker. And there's a crazy wave that went to the upside. I couldn't give you the whole wave because it's in the middle of it as an IPO. This particular instrument started in 2007, but it skyrocketed to 163.01. So everything here is pointing to good green candles going to new recovery highs, and that it keeps making higher highs. And until that changes, I just don't think I'd want to interfere with your core trade. Now, here's the other thing. And here's the other thing that you could treat, as we're talking now, you could treat the 1/3 that you take off, you could treat it as an entry point and put it in at 134 and 132 or 130. And say, okay, those are the levels I want to get back in. And if I don't get back in, it's doing fantastically, and I've still got 2/3 of a position that I thought was going to do something else, but has given me capital gains. And capital gains are actually much nicer than the small percentage dividend you would have got. So that's one way. And the only other way I would say to you is, if you get out right now, you've done really well, but together with capital gains and all that, with taxes, etc., the timing to get back in could give you maybe 1 or 2 losses, and then all of a sudden things are starting to change. This way, you've got a real clear thinking about it. Call long, 1/3 off, of which a half gets taken off maybe right now, half gets taken off maybe 2 points lower. Then you just sit and have patience to be able to put that back. I hope that's kind of
all right.
That fits into your thinking.
Thank you for the perspective.
Very good. Thank you for calling, Jerry. Always appreciate it. So, folks, let's just go back to that 10-minute chart, because this is always exciting on days like this. Yep, there we go. It says, here we go, next rally attempt. So this is only leg A. Now, I just wanted to explain that in the Chapman Wave methodology. You see this candle here. Oh, first of all, this candle, this type of engulfing candle can be very positive and can produce much better results if how do I put it? If within 3 to 4 candles, you're taking out an important left side high. That's a lot of words. How can let me explain it. You see that I've got leg C here on this candle of at 10 past 11 that made a low of 1981.50. I can't call that a trough. Why? It's still a leg down. The very next candle has to have a higher low bar, in other words, that low of 1981.50, has to have at least 1981.75 because it moves in 25-cent increments to be able to even call it a trough. Now, are we going to do this? Am I going to put in another one of these patterns where you get an arch formation and you turn down? I always draw these in whether or not I'm expecting it. Why? Because this kind of a move off a low to make a V-shaped pattern, if it starts to stall and goes to the right for too long, it's losing upside momentum. If I put it together with technical indicators of, say, where do I have one? I think this is one. No, this is not it. Let's go to this one here. I don't know what it is. Let's just put it up. 1 minute chart. All right, the 1 minute chart, not good enough. 1 minute chart's looking quite good. Let's go to this right here. There it is. Hello. No, this is the daily. All right, I'm sorry. I thought I'd be able. Oh, here it is, right here. This is the chart. This is a 5-minute chart, and I circled it. It's 5 minutes late getting to that circle right there. So you see what I'm looking at. Let me make it a 10-minute chart. So we're going apples to apples, apples to apples. There you are. So what we're looking at was the 5-minute chart. So that's there. You see that you've got the stochastic. The stochastic at the bottom here is making the swoop to the upside. It's still at 17%. I really like to see it at 20% to feel that you've got some upside momentum. Now, the next thing is that you want to see the MACD histogram, these little vertical lines. This one has different colors. You can't really see it. You want to see the vertical lines start to improve, going to the 0% line. It's still, oh, there it is, at 0.67. So it's kind of not clear. I'm sorry it's not clear, but I don't want to mess around with this chart. Now you've got a whole bunch of moving averages, and it says right here, you've got a low of 90. You see the 1977.50 in the Chapman Wave methodology. This is a system that was developed for me with my criteria. This is the support. These are what I call support and resistance levels. See how many you had a cluster formation at 2013, 53. It doesn't work in 25-cent increments. It works in S&P increments. Now this is 2012.68. Got to repel. You were repelled from those resistance, and now you were propelled by this 1977.15, and the actual low was 1981.50. So this is saying that's key support. And now we're moving higher. And this should be, and this could be, in fact, the low of the day, 1977.15. Okay, so maybe not, but I'm just saying the way it's acting, I love the fact that the volatility index has screamed to the upside. I love the fact that we're getting ease in some of these areas. TVI, dollar, VIX.X, there we go. Hit a dollar sign instead of a percentage sign, you get the right symbol. There it is. A scream to the upside. Is this F or B? We went screaming up to 26.72, a new recovery high. It means this week you've still got leg C in place because Monday, start of the new week, we made a new recovery high. I'm interested in what's going on here. I think that we might have made at least a short-term bottom. That's a tradable bottom. We wanted to play it this morning. I wasn't prepared to try to guess where the exact parameters would be, but it's just these are trades now. Your position plays maybe are just the short side. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman. We're back. Dow's down 250. Whoa, let me just look at that. I was so busy typing there trying to do some things. Yes, very nice. Almost getting the, oh man, another 10 minutes so we can try to test that line that I just drew in there, which is at 1995.50, and we're at 1992.50. Let's see what happens here. Okay, now a couple of things that I wanted to do. I was asked, let me just go through some questions here. Mouse is it right here? So downtrend line on weekly from late, which might be weaker than E-mini, which might be weaker than the Dow due to dividend yield. Can you look at monthly chart and analyze if this will lead to beginning of July weakness and not to jump in and buy now? I'm going to make 2 recommendations about jumping in. Because of the uncertainty, remember my expression is that the market loves uncertainty. Every day it's dealing with uncertainty and it can go up. It hates uncertainty about uncertainty, and that's kind of where we are. We're getting just a little bit of clarity in that there are things that governments are saying they're going to do. The British Prime Minister has said that there is plenty of funds for whatever we've got. Any criteria, we're fine. But this is very unusual. Look, you're looking at the dollar. The dollar. This is a leg A because it made a new low from that peak E. So this is a leg A to the upside. I could technically call it, because it didn't break the initial low of 91.92, I could call it F/A. But just for now, I'm going to say it doesn't matter what I'm calling it. It's a fantastic move to the upside. It's well above the 95.62 level in the 200-period exponential moving average. It's even a little bit above the 200-period SMA, the smooth moving average, simple moving average, which most fund managers use. So that's good. Now, here's the other thing. If you're looking at the weekly chart of the dollar, it started a leg B. It continues the leg B this week just by squeaking slightly higher. So that's good. If you're looking at the monthly chart, to me, this is going to be one of the most important charts we look at. The monthly chart of the U-shaped pattern that we've been talking about for ages. Looks like you're sitting at the beach there. And what we're looking at is we've got a very important move right now with just 3.5 days to go before the end of the month. So let's just put that aside. And now let's go to the question of the E-mini and the Dow. All right, let's exclude dividends for the moment, because each individual chart formation manages somehow to organize itself. Dividends or not, it just does what it has to do. What I'm looking at here is that in the Dow weekly chart, there's just too much time now for the W formation to be powerful. It's weakening even as we speak. No matter what happens, it's taking way too long to get to 18,200s or 18,300s. It's just too long, right? The action today with the gap down says to me that this pattern I'm looking at here could say that we've got a fairly vicious move to the downside with very little on the way up, if in fact no bounce occurs today of significance and we close the session in the 17,000, where we are now, 17,150s or lower. You close in this area with this candle, it says you should have a third candle to the downside. And then you can have a rally. And then you turn around and say, wait a minute, you have a rally? You could rally to just Friday's close. And Friday's close is way up at 17,405. That would be a huge rally, considering that it's going against a tidal move that is going to the downside. In other words, the tide has turned in the daily. The tide has turned in the weekly. The monthly chart, we have to wait for Thursday's close. All right? I hope I made that clear. Now, if we're looking at, I had questions as well. Let me just also, questions about the USD, JPY. I didn't cover those, so I'm going to cover it now. Yeah, this is a massive move to a leg D to the downside. The weekly chart says not good, and the monthly chart of the US dollar, Japanese yen says that dashed green line that I drew in ages ago, let me show you this right here, is being tested as we speak. That's the fulcrum line, I call it, and a declining fulcrum line. And that says that a close in the US dollar Japanese yen currency pair for November below 98. It's at 101.70 right now, and it's moving very quickly. If it goes under 98, you've got to look at this whole area right here of the 98 to 95s as the next major support level. That's okay. If I look at the EUR USD, I'm going to get back to that question in a minute. I just wanted to show you, remember I spoke about this, the H pattern in the Chapman wave can continue to be an H pattern by making a lowercase m pattern, and that's exactly what we got. Nothing to see here, folks, in the euro dollar at this particular time. What's really important is in the monthly chart, the dollar has held well in this little double U formation. All right, enough with that. Now I want to go to a couple of questions. Well, first of all, I want to go to a Den question that came up way earlier, and I didn't get a chance to do it. Basil, could you look at, where was it? Trend spike. I'm sorry, I'm looking for it. What was it? FT? What was I looking at here? Or TF? Could you ever typed it in earlier? Okay, peak D. Basil, in the words of Kenny Rogers, regarding Ford, SNHN, that's Shine, is that, that's Shine, that's the dentistry place, and AKS. Should I fold them or hold them? Okay, give me 1 second here. I'm going to do this real quickly. Ford, 1212, there was a stop in earlier up in the 1290s, 1280s. Should I hold them? I think that under this condition that Europe is now definitely going to have a tough time helping Ford. So I'm going to say to you, fold them. You can always get back in. A 10% gain on Ford will be much easier if it pulls back a little further. So let's not, don't get carried away here. That's one. AKS, AK Steel was acting so beautifully before. You know what? I'm going to say AKS, if you want to hold it in your portfolio just as a kind of a spec thing, I'd say fine. But to tell you the truth, I want bookkeeping to be the arbiter of a trade. And in this case, if it breaks under 4, it can go real quickly to 375 on a percentage level. That's just way too much. I would say at least get rid of half of AKS. If there is a bounce and it can get back to 442, 450, just raise your stop and make it real tight and let it tell you. I didn't like that action. It was acting very well, and now it's not. It's a peak D in the weekly chart. I just be careful. And the other one was SCHN, and that is called Shine. Oh, this is the Schnitzer Steel. The other one is not. This is Schnitzer Steel. Schnitzer's having a tough time. He got schnitzel today. It took out the low of 1508 of the 19th of May. If you want to do this, I would not do the same as AK Steel. I'd say if you want to have half out and half for a bounce and you can get it out, that's fine. Let's say the weekly chart is just, and the monthly chart is just saying, no, be careful here. Get your cash out. You'll be able to make it all up if you get it just perfectly the next time round. Just be real careful. It's not the David Shine. Oh, that's the other one, of course. All right. So we've got a break coming up. The Dow's down. Oh, let me just look at our chart right here. I like this to be live. There it is. It did it. Boom. It didn't look like it could, but there was the technique that said, good chance that it might. And there's the left side, right side. It did one bar early, and now it's doing a little consolidation. We'll be back in a moment. Basil Chapman, Dow's down 230. Be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. Whoa, I had a bunch of questions. So, Joe sent a great question. Dear Basil, one of the R.N. Elliott's principles is that wave 4 can never enter the price territory of wave 1. Take a look at the Dow chart that you posted today in your show. Wave 4 violates his criteria. This is Joe. So I just sent Joe. I wasn't sure which time frame. The monthly chart, of course, this is still a complex form. Remember we talked about it, spoke about it. All I was wanting was to go to 18,352, and then I could have said, right, we've now gone into 5 for Elliott, in my work at least. Legs C probably in the down monthly, and now we could have a sharp pullback. We could even go back to 15,900 or something like that. But most importantly, there should be a rally that takes you to 5. So I'm not sure which. You're absolutely correct about the Elliott wave analysis. I'm not sure that I'm getting which chart it is. So he'll send it back, and we'll talk about it tomorrow. Just real quick questions here. The Russell. Let me do this. I'm going to do this quickly because. IWM, I don't want to run out of time. So IWM, this is leg C, peak C in the weekly chart. F on the daily chart, there's a 1-to-1. There's a lightning bolt pattern we're looking at, and 109.01 on the Russell 2000 ETF. 107.99 is absolutely critical support. It's made a low today of 108.21. So this is going to be important, but I think it's going to test the 106s. This is the level right here, and it could even go a little lower. It's the monthly chart that's a big worry at this particular point. So yes. Adam wants to know about Delta. We just do Delta. It's the airline index. They're looking terrible. I've spoken about this for a while now. This is serious stuff now. It's the first time that I can say that my transportation, the transportation, the IYT, is acting in a way that says to me, watch out. That's the reason why I think that I have to now be looking at a very choppy summer. For the moment, lower lows and lower highs. And we have to look at, Scott and safety. Scott, we've got a minute. You're looking at what? Scott, be careful with your CX. If that's what you're trading, have patience. Don't do anything for the moment. So I just wanted to tell him that. I think you wanted to ask about all of those CX, AA. Just for the moment, you're going to have to be careful. Now let's go back. Okay. We're about to run out of time. Before we do that, Sarah wants to know about the brokers, the XBD. I can't if I've got my chart pattern up at the moment. Yeah, no, I don't. But XBD is making the U-shaped pattern. It says, like the financials, be careful. Left side test of the lows of February is very likely at 135. Is at 143. It's the brokers. The XLF is trading right now. It is also acting very poorly. Monthly chart has me kind of worried, I must say. It's going to be I'm not sure what's going to be the trigger for the next move up. I'm just making it as clear as I can. If you're looking at, remember we spoke about those banks, Deutsche DG is looking great as Dollar General, but we want to look at Deutsche Bank, DB. So look at DB. Oh, this is not good, broken all support levels. Watch out with the whole bank area. It's just not the place at this particular point. I think I'm going to do this. I'm going to go to the VIX index and tell you to be really careful because the VIX index is now at the low, almost the low of the day, 23.99. But if the selling waves, you see, this one should have been a much nicer move that we saw in the 10-minute chart. 10-minute ESU6, there it is. See, this hasn't got legs to the upside. So there might be backing and filling. Don't be too brave. In fact, you could just take a few days off. Just watch the market. Let it settle down. There are going to be some great buys. So all I'm going to say is be real careful, everybody. We're in a huge chunk of cash. Our one short position is down a lot from where we shorted it. And our long position, I don't know if it's still up. It was up. Yep, it's up even more now. And that's the way I'm trying to do it. Stock by stock, piece by piece, and break by break. And we're just about to break out here to the new section, which will be the swim lesson. Hold tight. You'll be in for your swimming lesson. Very beautiful weather for a swim. I'll be back tomorrow. Have a great day. Check out my opening call. I think it'll be very helpful. Thanks for being here, and see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.